Good evening, everyone. Time for another silver update. This is the 30-minute chart of silver provided by netdania.com. You can click on the link below. Drawn a trend channel that we're currently in. You can see the bottom is around 30.50, 30.60, and we're still within that trend channel except this anomaly here. You can see that we're beginning to rise in a stair step or series of flag formations. You can see the latest right here is this ascending wedge flag, whatever you want to call it. This type of pattern, you can see we had one here. This type of pattern, for the most part, 80% of the time in my experience, resolves to the upside. I think this one's going to result to the upside. And that's going to give us a attempt to run at this upper trend channel, which is probably going to meet up with 35 when we get to it. Now that's going to be a very key point because 35 is a very, very important price. When we pull out farther, we can see just most recently 35 was the place where we failed. If we pull out farther, we can see that 35 was tested before that. I've pointed out on other videos that 35 is a key level. It's actually been tested a total of 4 times. You can see on this run it actually ran to 37.50, but the base of the run was 35. This one was a lot of backing and filling around that 35 price. So 35 is really going to be a key level that we want to watch to see if we get through. So whether that trend channel meets up, that's going to be hard to say. It's harder to draw it on this one, something like that. So will they match? We'll just have to wait and see. Now, the main story of the night, I was actually going to do something about the fiscal cliff and all the machinations and deception involved in that. But we have another video out by Storm Clouds Gathering, so I was diverted. I'm going to have to go ahead and address that and make that the topic of the night. Before we do that, though, let's go over to the questions of the night. I'm just going to deal with one question here. It's fairly long. It's from CHC, and he says, Brother John, I have intensively studied the economy and all the related subjects for 2 years now. I've interviewed quality, knowledgeable sources and put together educational pieces for my radio show, and even built a website to try to gather all the subjects in one location to stimulate thought on these problems. I've done my best to be as logical and truthful as possible, supporting each area with facts and good resources. This Thanksgiving, we had our annual family meal, and politics are definitely off the table. It's now pointless anyway. My wife's side is far lay down. I'll believe and do anything I'm told. Sheeple left. I know both political sides are now moot, and I will point out that there's a lot of lay down and do whatever I'm told. Sheeple on the right. When I finished my website, I sent everyone I could think of the link. While I got a precious few responses of support, my wife received several emails from her side of the family questioning my sanity. Well, as you can guess, I got the cold shoulder and some under the breath smart alecky chicken little comments at the family get-together. I had to bite my tongue to remain quiet and keep the peace. It is painful to be rejected on such an important subject and not even to have any logical debate. The sheeple only offer up a motion for counter-argument because there is no statistical support for the everything's okay conclusion. Your argument for precious metals, silver especially, is a solid one, but getting such a logical conclusion out there is painfully challenging. Now, I have been successful in gathering up a few that get it, and these folks are in high and important places, so that helps, but I can't help but feel pain when I think of what may happen to her family when the crash or the slow slide comes about. Well, continues actually as it's already started. I have a question. I understand the collection of it, but not the other half. Would you give a talk on selling and using silver once the system crashes? While it takes some study to comprehend silver, its history and its movement tells the story well. Keep up the good work and don't give up. And then he lists his website, so you can go to that, aparadigmchange.com. So there's some questions there and just kind of some musings. the main question is about this: what would you do on selling your silver? Now, I've addressed that in the Office series, and again, I have to point out that it's not in your interest to sell silver for dollars, because it's my opinion that the dollar is going to be replaced by whatever replaces it. Obviously, the people who, and we'll get to this issue when we go to the storm clouds gathering video, the people who are looking for a catastrophic collapse, and again, I'm going to point out, I'm not necessarily in that camp. There's two main scenarios that can play out. One is inflation into hyperinflation. The other is going to be a deflationary collapse. The people that are projecting a deflationary collapse, a lot of those people like junk silver, because they're looking at a time period, a time window where money fails, and then the junk silver is going to be superior to anything else simply because it's highly recognizable, at least in the States, and it's in small denominations, and it's very difficult to counterfeit. So those people are looking for a collapse, and they're stacking silver for that. I, on the other hand, am not convinced that that will happen. I do believe there will be some type of currency crisis in the U.S. as the dollar loses its reserve status in the world, but I don't necessarily agree that that will have as large of an impact on the silver market worldwide. And again, we'll get to that when we look at the storm clouds gathering video. Now, you have to understand that this is the nature of bull and bear markets. You can't have a bubble without having the very large majority of the population completely convinced of the story. That's the whole nature of contrarian thinking, that when everyone is on one side of a trade, you want to take the other side. So I think what you're experiencing is the sort of bubble mentality. Everyone's convinced that paper is the way to go, and that's where everybody has their money. Now, once everyone is in on that game, and apparently it seems to be that not only are all the people going to be in on the game with their 401ks and their pension funds, but also the government pension funds, and now we see the Federal Reserve loading up its balance sheet and encouraging central banks around the world to load their balance sheets with garbage, toxic trash, paper. And so you have to get everybody on board before the collapse comes. That's when bull markets end, is when everybody's involved. So you should not find it surprising that everyone that you talk to thinks that you're insane. That's exactly what happens at market turns. That's when the market can't go any higher, because there just isn't anyone left to buy. All the suckers are already in. So that's just the nature of it. If you look back to Ayn Rand, I think she was asked at one time, well, what about the poor? And her answer was, well, make sure you're not one of them. So I understand the sentiment about your family on your wife's side, but unfortunately, because these people have bought into a false paradigm, they're going to have to suffer the consequences of believing in a false paradigm. And when the paper promises are reneged on, again, either through deflationary collapse and just reneging of the obligation, or if the obligation is reneged upon by paying them with worthless paper currency. One way or the other, the obligations that the vast 99% of the majority are counting on to be there aren't going to be there, and they're going to be reneged upon. Then, of course, just a word of warning to you: when the collapse does come, these same people that you've warned, rather than thanking you, they'll probably blame you for what happened. That's just the way things go. So live with it, deal with it. That's just the way the world works, and we're all in the same boat. So let's get over to the latest storm clouds gathering video. He's done another debunking of the silver manipulation. Before I jump in and analyze his debunking, and it's only about a 2 to 3 minute video, so it's very short, and he really doesn't get into any specifics. I don't think he really knows any of the specifics. I really think he's talking about, now again, I can't question his motives. I did use the term shill clouds gathering on the last one. Probably shouldn't have used that. I don't know whether the guy's a shill or whether he's just misinformed or whether he's just proud and talking about things he doesn't understand. I think this proverb probably explains it best than anything else. This is Proverbs 18:3. It says, "He that answereth a matter before he heareth it, it is folly and shame unto him." So when you go spouting off about things you don't understand and you make pronouncements about things you haven't investigated, then ultimately you're going to end up with a lot of egg on your face. And of course, that's what's going to happen to storm clouds gathering, because he simply doesn't understand what he's talking about for whatever reason. I don't know what the reason is. So let's watch the video and we'll take it apart piece by piece.
Price of silver is volatile. It goes up and it goes down, usually several times a year.
Okay, so let's start with that, because that's one of the classic arguments that the manipulators use, because of course, as I've pointed out many times, the purpose of the volatility is to discourage people from investing in it. If you can make it volatile, you can make it so that people don't invest in it. So his point is that silver goes up and then it goes down and it's very volatile. But I think if you follow the silver market as long as I have, and we can see it on the chart here, I wanted to show it on the weekly, but we'll just go ahead and use the daily chart. Actually, the volatility in silver, and you have to be careful when you're looking at indices like the VIX. The VIX is not a very good gauge of volatility. It tends to only trigger on the downside, but so you just have to watch out for indicators like the VIX. But as you can see here, the price volatility of silver really doesn't exist on the upside. As I've shown you here with the flag formation that we're building and ready to break out of, when silver rallies, it pretty much rallies in a standard bull market formation. So you can see in this rally period here that we had, we really didn't have a lot of volatility. You did have a volatility spike right about here. You did have a little breakout there, and you had some moves there. But the volatility in silver on the way up really isn't that high. Silver is only volatile, really volatile, on the way down. And you can see, if we go out to the daily, well, we're on the daily, you can see these daily moves to the downside. This is volatility. This move here is a couple bucks, and here you can see in 3 and 4 days we had a move from $48 all the way down to about 33 bucks. This here is even more drastic. You had a drop from 40 bucks down to below 36, and then you had a drop from 36 all the way down to 26 in 2 days. So that's the volatility. The volatility is on the downside. The volatility is not on the upside. Now, that is true that that the stock market and other markets trade in that manner. Yes, fear is a more powerful emotion than greed. Hence, there is a more dramatic move to the downside. But I would say that silver volatility is even more extreme than any other. But if you took out the downside days, you would not see that type of volatility. I think others have done studies on it. One of the key studies was to take out the overnight and subtract for that, and you have a fairly steady price appreciation. So my contention is the volatility is due to the manipulation. I've done a lot of videos to prove that, but let's go ahead and continue.
And the movements are pretty drastic. And when it's moving up, there's a certain group of people, and you probably have seen this, who consistently will start talking about how silver is going to go to $200 an ounce, $300 an ounce, $500 an ounce. Sky's the limit. It's never going to end. The moment it crashes and it goes down, they start talking about silver manipulation. I understand where all the talk of silver manipulation comes from. You know, I've listened to people describe, how J.P. Morgan has these positions and how there's paper investments that people are treating as if they're silver on the market, and how sometimes these paper positions flood the market at specific times in order to drop the price. However, this does not account for the base price, which it equalizes to over time.
Okay, so I don't really know what this term is that he's using. What does he mean by base price? Does he mean the average price? It doesn't really make a lot of sense.
And this is really clear once you actually look at the consumption percentages per industry. According to the latest numbers that I looked at, which are a little outdated, so give or take a few percentage points, the bulk of the consumption, 53%, is industrial uses. 13% is photography, and 24% is jewelry and silverware. So that makes up 90% of the market, which is not investment related. Now,
okay, so 90% of the silver market is not investment related. Now, we've covered the fact that the volume, and again, we can have disputes about volume. Netdania is a combined source. Silver Doctors has covered that, but it's been well documented that the volume in silver has reached as high as 1 billion ounces a day that's traded on the COMEX. So, and again, I point out continually that as FOFOA was the original one to point out that only 5% of the physical silver that's delivered to the manufacturers for use, 5% of the silver is delivered on the COMEX. So that means if only 5% of the silver that's delivered on the COMEX is used by industry, that's going to come to about 37 million ounces a year is actually physically delivered from the COMEX to industrial users. Take that number, 37 million. In fact, we're going to be using the calculator a bit here in the future, so let's use the calculator now. Take that number as 37 million, and that's the physical amount of silver that's delivered to manufacturers on the COMEX. And let's divide that by the volume of ounces that goes on the COMEX. They've been as high as 1 billion, but we'll just use, say, roughly 200 billion. It may be more, it may be less. So we'll divide this 37 million by the 200 billion that's actually traded on the COMEX. And that means that the amount of silver that's delivered from the COMEX to industrial users is 0.0002%, or 1/50th of 1%. The fraction is so small that it's infinitesimal. So the question becomes, if he's correct that the bulk of silver trading has to do with industrial manufacturing, and of course then that would be the miners selling, then who is trading these billions of ounces every day on the COMEX, and why? Are they paper investors? Well, if they're paper investors, then I thought he just said that 90% of the trading in silver has to do with industry. So who are these people that are trading 99.999% of all the silver, and only 5% of it is delivered on the COMEX? So it doesn't add up. It doesn't make any sense. His argument is nonsensical. The trading in silver on the COMEX has absolutely nothing to do with industrial manufacturing.
On the investment side, you got about 7% coins, 2% pure investment, and 1% de-hedging. That's clearly the minority of the market, 10%. The minority. So whatever moves happen in that segment cannot be as important as the industrial sector. The rest of the market, that 90%, the vast majority, is just supply and demand. The factors, they want to produce a product and they need silver. They try to get it at the lowest possible price.
Again, it has nothing to do with supply and demand. As I pointed out, only 5% of the supply is delivered on the COMEX, while billions of ounces are trading every day. So it's not supply and demand for industrial users.
They're trying to produce the silver and they're trying to sell it at the highest possible price. So the market is going to equalize to a base level. There's going to be some movements upward and downward that can be manipulated by investment. Yes.
So the industrial users, and I pointed this out with the Silver Users Association, who banded together to suppress the price as well, they are the ones trying to get the lowest price. Of course, the miners are the ones trying to get the highest price. But again, 99.99% of the activity that you see on the COMEX is not either the industrial users or the miners. It's someone else.
But in the end, when you have 90% of the market being driven by industrial consumption, and you consider photography and silverware, those are a form of industry, then it's going to equalize at a natural price that people are willing to pay. You're not going to be able to manipulate that higher or lower for any significant amount of time. And when you look at those numbers, it should be pretty clear that when people start talking about silver manipulation, what's really happening is that they're trying to justify and explain away the fact that the market really doesn't match this artificial paradigm that they've been trying to apply to it. Now, the paradigm that people are operating from when they talk about this is that when the dollar collapses, there's going to be a mad rush into silver to hedge themselves against inflation.
Okay, so now this is where he's very confused. First of all, the people who promote stacking silver, as I pointed out, are not necessarily into either the deflationary or the inflationary camp. I would say that the majority would be in the inflationary camp, although there are some survivalists. The minority, I would say, are in that deflationary collapse camp. But again, silver is a hedge against inflation. We can see that silver has been a hedge against inflation. I started buying silver in the late 90s, early 90s, 2000, stepped up in 2003. You can see that silver is one of the best, if not the best, performing market for the last 10 years. I believe it will be for the next 10 years. But silver has been an excellent inflation hedge so far, but there's no indication that that a deflationary collapse is the scenario that's going to unfold. In fact, I think if we look at history, it's more likely that the central banks and the politicians who put them in power are going to hyperinflate the currency rather than let the obligations collapse and default on debt obligations.
But what they're not accounting for is that at the same time there's going to be a collapse of industrial consumption because people are going to be buying less computers. People are going to be buying less consumer electronics.
Okay, so let's take a look at that because that argument is bandied about often. First of all, my main objection to that argument is that it is a very, very U.S.-centric view. And I hate to burst your bubble, a lot of people's bubble, but the U.S. is becoming increasingly irrelevant to the world economy and to the silver market going forward. So let's look at some numbers here. We're going to start off with some numbers. This is from the mobile thinking site, Global Mobile Statistics 2012 Part A, mobile subscribers, handset market share. This is one of the key industrial uses of silver. Every one of those gadgets has silver in it. So let's look at the numbers. At the end of 2011, there were 6 billion mobile subscriptions. Estimates the International Telecommunications Union. That is the equivalent to 87% of the world population and is a huge increase from 5.4 billion in 2010 and 4.7 billion in 2009. Mobile subscribers in the developed world has reached saturation point. Now, you have to remember this. When you're talking about saturation point, that is not bullish for these companies because at least the stock investors of these companies are looking for growth. Saturation point is where they begin to sell off the stocks. But again, that has nothing to do with silver. Saturation point is very, very bullish for silver because how many people do you know who have a cell phone, decided to throw it away and stop using it? Or how many who use a cell phone decided to get the latest cell phone? I think the answer is pretty obvious. So saturation is extremely bullish for silver. These are people who have adopted the device and aren't giving it up at about a 99% rate. With at least one cell phone subscription per person, this means market growth is being driven by demand developing world, led by rapid mobile adoption in China and India, the world's most populous nations. At the end of 2011, there were 4.5 billion mobile subscriptions. I'll let you read the rest of this. So there's no slowdown in mobile devices. Now, we did have a crash, per se, a financial crash. This is a chart of the African penetration mobile subscription market. This is current to 2012. The dotted blue line is penetration, and the number of subs is the bar. Now, what's interesting about this, remember the financial crisis we had in 2008? Don't see that on this chart, do you? Not at all. The penetration and subscription has been steadily growing. You can see it's just starting to round off as we approach that 100% point. These are people who are going to use cell phones for the rest of their lives. So he's wrong in two ways. One, he believes it's U.S.-centric, and two, he believes that a slowdown in the economy is going to impact this usage. It's not. It hasn't, and it won't.
And maybe 5 to 10, 20% of the population goes into silver. I think that's a little.
Okay, so let's use that and bring our calculator out here. He says, let's say that 5, 10, or 20% goes into silver. So let's use that figure of 20%. Let's say that's worldwide. We'll go for the big ballpark figure. So 20% of world population is 1.2 billion people. And let's say those 1.2 billion people buy an average of, we'll go with 5 ounces. That's 6 billion ounces of silver. So if 20% of the world's population decided to rush into silver, it would consume, we'll do 750 million as the number that is mined every year. It would consume 8 times the world's mining supply every year. In other words, the numbers that he just gave indicate an explosion in the price of silver.
Bit optimistic, but even that amount of people coming into the market isn't going to compensate for the collapse of the industrial market.
Okay, so that's the story. Again, a person who talks about something that he doesn't understand it's folly and shame unto him. I don't know why he's talking about silver. He clearly doesn't understand anything about silver or the silver market. The silver that was used up over the course of the last 30 or 40 years was done at a low price because the United States had been dumping that silver as a matter of policy. When the Hunt brothers tried to corner the physical silver market, they failed, partly because of regulation changes, but mainly because the physical was there to be dumped. There was still about 10 billion. In 2006, we hit 0, and you can see we're breaking out again to test that 35. But in 2006, we hit 0, and that's where we really took off. And we have not reversed that, although they will tell you that supplies are being stockpiled. They're just counting paper ounces in the SLV. So we're in just as bad or worse of a situation as we were in 2006, and therefore it means an explosive price move. We're going through 50, and once we get through 50, that's when your 5, 10, and 20% of people are going to take note and start piling in. And we'll talk to you next time.